Hi, good afternoon, everybody, and welcome back to Series 5 of the Climate Pioneers Show, Funding a Better Future. Throughout this series so far, we have been focused on angel investing for impact. We've been digging into why angel investment is such an important part of the early fundraising journey for a founder, how they can be prepared for the challenges that they're likely to face along the way. We've also explored the lack of gender equity in the world of angel investment, why climate is a wise investment strategy. And for these next two episodes, we're going to be looking at how you can begin your own angel investing journey. This is our penultimate episode of the series. So if you've missed any of the previous episodes, you can catch up with them in a number of different places, either on LinkedIn. All of the previous episodes are on my profile on there, on YouTube, on the Above and Beyond channel, or in podcast format on Spotify, Acast, and Apple Podcasts. And today we are joined for episode 6 by the one and only Andy Ayim of Angel Investing School and, as of yesterday, Open Angel. When I began my own journey into angel investment back at the end of last year, I started off by asking a number of people, all the syndicates, where should I go to learn the basics? And the same name came up time and time again. They all said, go and talk to Andy. Andy's been working in the world of startups, scale-ups and product growth since around 2010, 2011. And in 2020, launched the Angel Investing School, which is a cohort-based program teaching people the basics of angel investment. And he's doubling down on his mission of democratizing access to angel investing by launching Open Angel, which literally launched yesterday. So he'll be telling us all about that. And Andy's also been working in executive coaching, nurturing and developing people and developing the leaders of the future, which I'm super excited to hear all about. So Andy, thank you so much for joining me at the end of what's been a really, really busy couple of weeks.
No, thanks for having me. And I always love when our journey intertwine in this way. It's like you meet through this platform with the Indian Investing School, you get together outside of that. We shared a taxi the last time we were together, and now we're on a podcast together.
Gotta love it how people's paths intertwine. It's almost like so how was last night? Last night you launched, so yesterday was the launch of Open Angel. You had the launch party last night. How did it go?
Do you know, I think every entrepreneur or even leader can attest to this, where there's so much anticipation leading up to launch. You're seeing all of these little details and problems that could occur, but it's so liberating and it feels like a weight off your shoulders as soon as you get it out into the world. It's like, oh, finally, this thing that we've worked on, we can share with others. And there's that moment of pride when you just see the smiles on the team and everyone's faces. And, you know, it's such a privilege when you can bring great people together and you can just see connections happening in the room. So above and beyond the fact that we're sharing this platform, we're also sharing in the room the fact that we can bring these great people together. And I just love that feeling, even though it's really draining doing events. So people asking for monthly events, I'm not the guy for that.
Yeah. And I'm done. So take us on your own journey, if you're happy to kind of take us back to the beginning, because you've had an awesome path into this. And I'm always really interested in learning sort of what sparks people's entrepreneurial spirit, what kind of guides people's journeys through their careers. So take us on your journey, Andy, from the beginning, how you got into the world of angel investment to where you are now.
Yeah, so I'd say that I was always really curious growing up as a kid into like this intersection of like culture, business, and technology. And some of my early role models in the technology space was the typical like your Bill Gates and then Jeff Bezos and your Mark Zuckerbergs. But I never really connected to the story of how they got to where they started, because I grew up in a very different environment with very different challenges and situations, with different privileges that I had to them. So I couldn't quite connect on an emotional level with their journeys. So I always was really curious around how do we create pathways to opportunity for more people like us? And ultimately, I always feel like if we're going to solve the world's most pressing problems, we need a more representative set of people solving those problems as entrepreneurs. So I didn't know how that was going to manifest, how that was going to play out, but I knew that I wanted to do something within that area at some point. And then I had this opportunity by luck or serendipity to be on a consulting project, which took me to San Francisco. And Cherry, my mind was just open up and blown, because I was meeting entrepreneurs, I was meeting venture capitalists. It was like a fast track MBA into entrepreneurship. And the thing that really stuck with me was this philosophy of this American dream, and everyone having this belief that they can go from nothing to something, where failure was like a badge of honor, and they would reward you for going on these fast learning journeys and continuously learning by trying things out. There was a reward for being audacious. to be honest. And it was very different for me because growing up in the UK, I feel like we're much more conservative, more private. There's a bit of a shame actually attached to failing.
Yeah.
So you always want to tell this happy path and this positive story of what institution you went to and what company you worked at and what brand you're associated with. Plus, like when I left university, I generally felt like I almost couldn't afford to be an entrepreneur. I mean, I need to contribute to rent, and I have some stuff going on back home, with parents' tax, where I need to kind of look after my parents as they get on. So there was a very different dynamic that I was introduced to by being out there, and that was my first introduction and inspiration, like to get into this world of, I guess, entrepreneurship and investing.
Interesting. So I literally really resonated with me when you said that, because I was at a dinner a couple of nights ago and I sat with an investor who is moving with a fund from the US over to the UK. And we were talking about what her experience over this last 6 months has been and what are the differences that she sees between the markets. And she said, founder confidence is so different. When she's in the US and she's speaking to founders, you know, they've got the American dream, they've got the big dream and these big horizons that they're shooting for.
Audacity, absolutely.
Here, it's so much more measured, it's so much more downplayed, but almost in a way that it doesn't get the investors excited enough about it, right?
Yeah.
But yeah, interesting that you said that. So yeah, you went to the US, carry on. And you thought it's possible.
Exactly. And it also gave me language, things that I didn't quite understand before. So before I went to the US, I started a business called Mixtape Madness. And in that business, I was essentially like spending a lot of time with customers, understanding their pain points and needs, and feeding that into what we developed and built next. And in the US, I learned there's a language for that. There's a role called product management.
Right,
So I was really curious. I'm like, all right, when I return to the UK, I want to get into product management and work on the inside of one of these fast growth businesses, because I had FOMO. I'm like hearing so much about it. I'm speaking to these founders. I'm speaking to investors at credible funds like Andreessen Horowitz and Sequoia and Greylock. But I was like, I need to get skin in the game. I need to experience it myself. So I ended up joining this fast growth company called World First, which is like a competitor to TransferWise. And I was the first product manager, and I said I'd join as a first PM on the premise that we hire in my boss, someone that I can learn from. Really rare experience, right? And there's a guy called Mark Abraham who was just the most incredible coach. Like he trained me from basics into like the mental models, the way of working, the why behind the what of product management. It was the real artistry of the role, you know. So I learned to fall in love with like the craft of product management essentially, and I ended up rising into a head of product at another fintech. And I remember speaking on stage at this conference called Mind the Product. And I remember finishing it and feeling a bit empty in that it was such a pinnacle moment. And I meant to feel like at the height of my career speaking at this global conference, but I just felt like I'm at the core of what I should be doing.
Oh, interesting.
You know, I looked out to the crowd and I was like, I loved speaking on stage. And even when I spoke on stage, I was speaking about using mental models to make smart decisions. And I couldn't help but talk about inclusion throughout as a golden thread throughout that talk. And I remember talking about my family, and that was the kind of eureka moment where it's like I need to lean into this feeling more, you know, which was really hard at the time, right? It's like I've got a secure job, secure career, like I'm ahead of a function, you know, like so pathway wise, it was like it's very clear like how I can continue to ascend that mountain, whereas now I was kind of descending from that mountain and I was like, what does that mean in terms of a job? What does that mean in terms of career? And it wasn't quite clear. So I ended up I haven't spoken about this story in this detail elsewhere actually, but I ended up joining Entrepreneur First, which is an accelerator program here in London, all about like you meeting your co-founder. And it didn't work out for me because I'm like, it doesn't work for me meeting people and just starting a business. I need to know people deeply. I'm an empath. I'm a humanitarian at heart. You know, I took theology and history as A-level subjects. Like I need to know people for who they are. But during that experience, I ended up in capital. So that's kind of how I fell into venture and got my first role. And her whole investment thesis was around investing into underrepresented founders. So she was pattern matching against herself as a Black gay female in the US to say, I want to invest into people of color and females globally. So that's my first introduction to a fund, which actually overtly had a thesis, which was all about investing into diversity, which was for some people was controversial at the time. But for me, it was such a great, incredible learning experience.
Amazing. And so what happened after that?
Yeah, so that gave me this insight that, you know, we raised a considerable amount of money, a few million. We invested that into 25 different startups during my time there. And I'd say 80% of those startups struggle to close a funding round. So I was
Right.
like really understanding like why are they struggling to close these funding rounds? And there's three things that were really apparent to me. There's a vast education gap, how you package up the story, how you really present to VCs and to investors, like this thing called angel investment that you should be going for before going for VC investment. There's just a vast knowledge gap. Because if you
Yeah.
haven't been in this world before, actually, there's quite a lot to learn quite quickly. The second was that they didn't have any network of ex-entrepreneurs. So you couldn't turn to anyone for mentorship or for guidance, or what I call like the board that you can't afford, who can help you make informed decisions as you start to build this business. And the third aspect was they didn't have access to capital or to networks of capital, whether it's investors or family and friends. So for them, like running a family and friends round, they might get a few hundred or a few thousand, but they don't get enough to build up runway to start working on your business for the next 12 to 15 months and having that peace of mind where you can just execute on your idea. So those three things were real shackles and challenges for these entrepreneurs to close their rounds and therefore for them to kick on and start their businesses. So I started thinking deeply around how I can solve that problem, and I landed on the angel investing school. Like if I can train up investors from all backgrounds and democratize access to angel investing, actually that's the route into really helping these founders close their rounds. So that's where we got started 4 years ago on that journey.
Amazing. And how do you go about just setting something like that up from scratch, right? And yeah, talk me through how you put that into reality.
Yeah, so I think there's aspects of me where I'm a natural born product manager. So I just see
Oh, yeah.
things and I see the world through a certain lens. And I never treated myself as an entrepreneur. I always start by being an independent researcher and I'm conducting research. And what I learned from this research can either be, prove or disprove my hypothesis, like the thing that I want to learn. So there's no negative outcome for me going up. So it takes the pressure off me of I've started this business, I've got this brand on social media, I need to live up to this thing that I'm saying. I remove all of that immediately. So what I did was I sent a tweet out to say that I'm thinking about starting this course called the Angel Investing School, and there was a PDF attached with a core curriculum of 6 things that we'll cover. Not too dissimilar from what we covered today, to be honest. And people really got behind that tweet. They were interested. So I created an Airtable form and I attached it to that same tweet as a thread. If you're interested, sign up here. 57 people signed up. I said, all right, if 57 people are interested, here's a link to pay, to prepay and secure your place. And through a few conversations, it wasn't easy. We had 17 people secure their place. And that's that kind of oh shit moment where it's like, all right, do I actually do something now that people have actually handed over some money and trusted me, which is like a lot to say, right? Before you even put a product out into the marketplace. So I ended up speaking to a few people that I was connected to in my network to ask them if they could facilitate these classes. Because at the time I'd already made 1 or 2 angel investments and one of those had failed miserably. So I wasn't in the best position to teach on this subject matter. Now I'm in a very different position. But at that time, so I got different people in my network to teach on those different classes. And I really focused on getting feedback every week from every student. And then at the end of the course, getting feedback on how the whole experience was. And the feedback was overwhelming in terms of how well it landed and how many people actually made informed decisions not to invest based on what they had learned or to join an angel syndicate and start investing. And both of those outcomes were, for me, really good outcomes. Like, I didn't want people to waste £10,000 getting into an investment, investing more than they can afford to lose, and they can learn that lesson for a lot cheaper and quicker and easier with us. Plus, if you're going to join a syndicate, I want you to be well aware of what you're joining and how it works and how to make your first investment. So both outcomes are really brilliant for me. And that's what led to us continuing to do on that work, eventually registering a company and building on that to where we are today with products like Open Angel.
Amazing. And then talk me through how that, so obviously Angel Investing School, which was the course I did, was a cohort-based program, right? Facilitated by you and by other experts who basically give you the sort of 101 in angel investment, right? And give you the confidence to go and make your, or not make your first investments, right? Talk me through how Open Angel came about and how that is similar or different to AIS and an evolution of AIS.
Absolutely. So I gave this quote last night. Like a journey of 1,000 miles starts with a single step, but sometimes you don't really have clarity on the direction of where that journey is leading to. And that initial premise for angel investing was genuinely about, like, how can I democratize access to angel investing? And over the last 4 years, on the surface, it seemed that we had done incredible work. We trained 600 angels, over 30 nationalities, countries such as Singapore, Nigeria, United States, A number of syndicates spun out of like the people that we had trained. They've invested over $5 million into startups globally. We've done some incredible work with corporates like Google. We trained 100 Black Googlers who started a Black Angel group, who themselves have invested over 4.5 million into startups. They've got about 250 members today. So on the surface, it's this incredible impact. But actually, the unintended consequence was that this was a really exclusive and private experience. You've either paid on this limited experience for the public, where there's only 30 places each time we run a course, and maybe twice a year, or our corporate courses were even more exclusive. We don't even share much about it on the internet, but actually, like, again, it's a very private and exclusive experience. So at the start of this year, I really challenged the team to think 10x and not 10%. And this was really scary and challenging because we were fundamentally impacting and cannibalizing our existing business model by saying we're going to create a platform to give a lot of our best lessons away for free. You don't have to pay, no email gating, but it enables us to think 10x and not 10% and reaching 6,000 aspiring angels rather than 600 in the next 12 months. So, you know, and this is a really good conversation actually, because sometimes doing the right thing isn't easy. So if it's going to be hard, we might as well choose what our hard is. I'm choosing between hard and hard. So I might as well choose the right hard. So that's how I treated this platform. And for the team initially, it was a really hard conversation to have with each of them. Like, what does it mean for them? What does it mean for us as a team? What does it mean financially for the business? But unanimously, everyone agreed in terms of achieving the initial mission, this was a step we had to take. You know, and it's really, it was really inspiring for me how the team got around this mission, and this mission meaning so much that it means more than pay, it means more than finances, it means more than a business to kind of do this for the ecosystem that we're trying to reach and affect. And it's the first time I've ever experienced that in a business. You know, usually it's you know, driven by quarterly results as a publicly listed company, or if it's privately, is right trying to unlock that next funding round. So it's always commercially driven, whereas this was very much impact driven. And you know, it's definitely impact over intent. You know, so we had a decision to make. Like, there's a clear path for us to make more money selling into more corporates, government work, regional work, which we do, as well as the public programs. Or there's this other path to defer a lot of that, to pause all of that, and to build this platform, which is what we took, right? And looking back, it was absolutely the right decision, even though it wasn't the easy one to make.
And that's twice now that you've gone, I'm on a comfortable and established path. I'm just going to step off this path into something that is more aligned with my mission and the impact that I want to have. So you did that, leaving product management to move into the world of investment, and then and again here.
And Cherry, do you know what? You've touched on a really good point, because my coach said to me during our first kind of like session together that I'm a life adventurer.
Oh.
And it makes so much sense, because there's so many experiences in my life where I've reinvented myself, or like really gone to the edge of my comfort zone in order to unlock that next phase of growth. And I think about when I was 22 and I went backpacking to South America, and my friends were like, "You're gonna get killed. It's not the Black thing to do. Like, why the hell are you doing this?" I was probably the first person in my company, in my my family lineage, to ever have gone to South America. I don't know anyone else, my uncles, my aunties, my grandparents, who had ever stepped foot in that continent. But I was so curious about hearing these stories at work while I was actually on placement, that they were going to Australia for their gap year. They were doing all these. I was just not even jealous, just really envious that I want that for myself. So that was the first time that I took that bold leap of sacrificing the safe path to go on this journey of backpacking initially. And then I had a job at Ernst & Young. That was like my first professional job. And again, like I got promoted from the graduate advisory scheme to go and join either strategy or customer at the time, which were the two practice areas in management consulting. And I said that I just didn't want my path to be dictated to me. I wanted to explore more and discover more of who I am. So I ended up leaving in Ernst & Young during that time. And I go backpacking again, this time across East Africa with my younger brother, my friend, because I wanted to share the experience of ours back home. So I ended up coming back to the UK and landing at a small consultancy, a startup called Elixir. About 25 people at the time, ex-Accenture partners. The majority of the graduates were Oxbridge and Cambridge. And I was starting to get career confidence in myself that I'm not Oxford and Cambridge, but I back myself. Like, I'm really good at what I do. I have a difference. So I ended up getting the job there, moving to South Africa with them initially for a year and a half, and then moving to San Francisco. And I had a 10-year visa with them to build out that business in San Francisco. And just for context, that business ended up growing into a multi-million pound business line for them, and they end up floating on the alternative investment market. But I leave Elixir to go and join a startup, which is where I joined World First. So when you just mentioned that, it's like, actually there's several moments in my career where I've been willing to sacrifice for the greater good of what I see ahead of me, if
That's
you like.
amazing.
So I've never noticed that until you said that, and then I thought, actually there's probably a number of times I've grown comfortable with it. It's normalized a part of this journey for me, and I have to say, like, and it's a really privileged statement to say, but I feel like my worst case scenario is that I can get a job that pays well,
Yeah.
because I know my skill set, and I know I'm highly employable. I know I'm a great people manager, and I'm a great person to work with. And that is not from a pompous viewpoint. That's just confidence in my craft and what I do and what I bring to an organization. So this route of entrepreneurship is de-risked, not because I have the financial safety net that's inherited from my parents. I don't, but I've got a skill set safety net that I know that I can always fall back on, and I know that because I fell back on it time and time again.
But I think that what you've done really nicely, because that is difficult to do, right? And I think there are so few people like you that are adventurers and will step off the comfortable path and go into the discomfort zone and try something new. But what you've done really nicely, especially with these last two moves and here with Open Angel, is you've stepped off the path, right, to try something new, but you've created something that enables other people who aren't maybe naturally set up to do that to go with you. Does that make sense? So creating something like Open Angel, you're almost saying to people that are stuck on their path, I'm going to give you the skills and the information and teach you that actually maybe you could come with me. You can build that confidence. You can try something new. So I think that's a great theme in what you've been doing. So if people want to access, tell us a bit about what's on Open Angel and how people can access it and what your goals and aims are with it.
Thank you, Sherry. This is a wonderful conversation, actually, and very different to a lot of the podcasts. So I do have to give you applause for managing to get different stories out of me and not bore the audience. So Open Angel, which is openangel.co.uk, is an open source education platform. So what that means is that we've created some content, but we've also curated content from others to feature on the platform. And the platform really does four things, essentially. It's got a bite-sized video course for professionals that are aspiring to get started in angel investing. It's got an eligibility quiz to let you know whether you're a sophisticated investor or a high net worth individual, which in essence means, are you eligible and allowed to invest in the UK into startups? Then we've got a fundraising from angels course for founders, because I know how difficult that path is. So what is like, it's a rare opportunity to hear from angels what they're looking for and what they expect from founders. You usually hear from VCs, which is a step removed. And then finally, we've got like a resource bank with angel syndicates, with platforms that you can invest on like Odin and Valburn, with tools and resources and ebooks, and basically just trying to make it really accessible and easy to understand how you can get started along this journey. And over time, we'll continue to add resources that people share with us from the UK Business Angel Association, from syndicates, from whatever, Innovate UK, from whoever wants to really plug and promote what they're doing for free to founders. So there's no email gating, there's no internet trickery here. It's generally free and accessible for all to access.
Love that. That's awesome. And you mentioned there a bit about the eligibility checker, right? And these kind of barriers, I suppose, for want of a better word, that kind of stop people either being able to invest or stop people thinking they can invest, because there are some ways around those barriers sometimes, I suppose. But in the sort of most basic terms, for anybody listening who at this point knows nothing about the world of angel investment, what are those barriers to entry? And if somebody doesn't necessarily meet those criteria right now, what can they do to still pursue their path?
It's an excellent question. So in the UK, the Financial Conduct Authority basically regulates the financial industry, which includes investments. And they've got something called the Financial Promotions Act. And within that act, not to bore everyone, we've got two definitions for who is allowed to invest in the UK. And if you think from the regulator's perspective, they're trying to protect you so that you don't lose your money in something that's really risky that you didn't really understand. And the two definitions, you're either a high net worth individual, which really boils down to like, actually, do you earn more than £100,000 a year or more? Or are you a company director for a company that generates 1 million or more in revenue. It was meant to be revised to 1.7 million, but I think they kept it at 1 million. But it's really high in terms of those thresholds. We think what percentage of the population, we're talking about less than 1%, really, that match that kind of threshold. And then if we look at sophisticated investor, which is the other alternative, if you're not a high net worth individual, you either have a place of resident, assets that you own, not including your place of residency, which account to over 250,000. So this could be, I own 2 properties that actually, if I add them together in terms of their market value, are more than £250,000. Or for the last 2 years, I've worked in the financial industry, so I understand how finance works. Or I've invested in the last 2 years into an unlisted company, which is a privately held company, which is a startup, for example, through an equity crowdfunding platform. And the last criteria is that I've been a member of an angel group or syndicate for at least 6 months or more. So the kind of wiggle room for someone that wants to get into angel investing but doesn't quite meet the majority of the criteria is that they can actually join an angel group for 6 months or more, so they can learn alongside that group before they get started with investing. Or they can invest through an equity crowdfunding platform to kind of wet their feet and start investing. So in the UK, we actually have low thresholds in terms of barriers to entry in comparison to the US, where you have to earn either $150,000 or more, or yourself and your spouse, that's $200,000 or more, or yourself and your spouse have a combined income of $300,000 or more. And they have a different regulator there, which is the SEC, which is the Securities Exchange Commission, who set the rules around kind of who is what they call an accredited investor.
I see, because I've come a cropper with that, in that I'm an investor here in the UK, and I qualify not under the high net worth bracket, but under the sophisticated investor bracket. And I tried to invest in 2 US companies and couldn't with either, because I didn't meet their accreditation level.
So I will touch on something that in the US, there is something called PIN. It's a group that I connected with recently. And it stands for Power in Numbers. And PIN basically are using this legal term in the US called an investment club that allows people to invest as little as a few $1,000s as non-accredited investors into startups collectively together.
Interesting.
So yeah, I've learned about that this year, actually. But I know a syndicate in the US that was spun out of Coinbase. I think they're called MoonHub. And they've been using this methodology of investment clubs to invest with accredited and non-accredited investors into startups. I think the one loophole of the way that PIN organizes it is that you're essentially investing into a fund-like structure, which is not a fund, I have to say officially, but a fund-like structure, which means that you get to vote on as a group what we're investing in or not, but you don't individually get to invest on a deal-by-deal basis.
I see.
So you've invested in this fund, and this fund is going to do 10 deals, and whatever the majority vote for are the deals that we go into. Whereas in the UK, we can use our platforms like Odin, as you know, to invest on a deal-by-deal basis into each of the startups that we're interested in, rather than we've given our money away and actually we're investing into these 10 deals, regardless if we like just three out of the 10.
Yeah, so got a bit more freedom. Interesting. I'll look into that. Thank you. And you mentioned that's something you've only just learned about this year, right? And you also said earlier on that when you very first launched Angel Investing School, you'd only made like 1 or 2 angel investments. It was still very early on in your angel investing career. So fast forwarding to where we are now, sort of 4 years down the line, I was trying to count on your LinkedIn profile how many investments you've made, but it's around about 13, 15, something like that I counted that were listed on there.
That's quite good, actually.
You must have learned a lot, right, in this last 4 years about the world of angel investment. Talk me through how your investment thesis, your attitude to investment has evolved through this last 4 years with everything that you've learned through this process.
It's a great question. So on a thesis level, I started off as a generalist. I just want to do good deals and back great founders. And then I went really narrow in that I really want to focus on gap closing companies, actually, like what companies are closing gaps for the planet or for society. And I still hold true to that. But it's actually quite broad if you think about it, because it could be financial inclusion, it could be healthcare, it could be climate change. But that's where I want to try to have a net positive contribution on the world. So that means that I can't invest in, for example, a buy now, pay later products, because I think net that is negative to the consumer and to the world. So it helps me make conscious decisions from a principled place around like what am I backing versus not. The challenge with that thesis is that I meet incredible founders all the time that fall outside of that thesis, which means that it's not necessarily the right startup for me to back, even though it's an incredible opportunity that I'm missing out on. And I think sometimes we have to remind ourselves that there's great opportunities every year. So you can't like fall into FOMO of I want to do a deal now or over the weekend or this highly pressurized deal, because there's these signals that, they're ex Google or, Index Ventures has got into a deal. Through the maturity and time that I've had now, I realized that actually the majority of their portfolios fail to make a return. So they're not any wiser in deal making. They just have the volume of capital to do great deals and get access to so many great deals, And the second thing that I've learned is that, like, typically when you do those formal rounds where I just want to get in quickly, like, you don't form a great relationship with the founder. You don't lean on the things that you actually want out of this deal, which is to learn, to be supportive, to so I'm not going to get out of it what I want to get out of it at a minimum, even if it doesn't make a financial return. And I think that's such an important thing to remind yourself of, like, am I learning about new industry, a new technology, a new business model, a front row seat of a founder growing their business? Can I add value and support with recruiting, making the transformative introductions? Those are the things that matter to me personally. If I can't do that, then I'm not really interested in investing, and that's okay. And I'll be transparent and honest with that up front, and the founder is aware of that up front. And the other thing that I've really leaned into is that, like, I started off thinking, the way that I can add value through my product skills I was an ex-product manager, I can help them on products. But what I realized is my whole lived experience from traveling and going backpacking to studying humanitarian subjects just made me really good as almost like an ethnographer. I'm great with people, understanding people at their core, what drives them, what motivates them, their lived experience, how they grew up. So when I have that conversation with founders, it's usually a really different conversation because I'm really getting to know them and where they belong in the world, what their understanding of the world is, and actually, is this their life's work that they're doing? Versus, like, I just left the old boss, and instead of getting a new job, I just wanted to be my own boss. And I can decipher that very quickly in the conversations that I have with a founder in half an hour or an hour. And I try to address this power displacement that often occurs with an investor and a founder. And I share something called my personal user guide, which is like insight into who I am, really vulnerable, really open. This is who I am. Right, some podcasts as well, so they can really understand who I am and whether I'm a good partner along this journey with them. Because ultimately, they're in the position of power in my eyes, because they're creating all the value, they're taking all the risk. I'm a cheerleader that has the privilege to go along this journey with them if they allow me to. So I think these are all the things that have helped me differentiate myself, where essentially for me, in the simple terms, I'm just trying to be more human in the connections that I'm making with people.
Yeah, that's so interesting, that power dynamic point, because I, at that same dinner the other night, it was a great dinner, by the way. Shout out
like
to
it.
Run by Juliet. I was speaking to a founder there who's just closed a fundraise, and I said, how was it? And he was like, now it's over, I can be really honest, it was rough. He said one of the hardest bits was just some really difficult, like, power dynamic relationships and conversations they ended up in with VCs, where they were sort of coming to the table with all of the power, right? And it was very difficult to then have a good, productive conversation, or feel you could be vulnerable, or feel you could be honest, and a lack of feedback, or sometimes some quite rude questions, and showing up late to calls, and a lot of this stuff that it sounds like is very much the antithesis to what your investor mentality is.
Absolutely, and I think it was Ben Horowitz in his book on culture that touched on, and Andreessen Horowitz, they introduced this rule that for every minute they're late for a founder meeting, they have to pay like $100 per minute. Ooh. And it changed behavior. People were no longer late for those meetings because he had put this thing in place that has now shifted their behavior around respecting founder time. And it means so much to them that they put this guiding principle in place, And I think sometimes we need these kind of things as nudges or ways for us to develop a habit of respecting founders, for example. So I loved that story that he shared in the book on that rule.
Yeah, that's cool. I love that. So when it comes to investment thesis, would your advice, well, first of all, it's encouraging to know that, it's totally fine for an investment thesis to evolve over time, right? And if you set out with a particular idea, that is gonna evolve as you mature as an investor, right? But would you advise people to maybe start more specific, or start more niche, or start broader and then niche it down over time? Or I know it's always going to be quite a personal thing, but broadly, what's your advice to people on that?
I'll say the pros and cons of both. I think starting broad and generalist is great because it allows you to see a number of different deals and to understand what you like and you don't like. So you really learn more about yourself in that way. However, the negative of starting broad is it might limit your your ability to add value. Like you're invested in healthcare, you have no network there, you don't know how to do due diligence in that field, you know, and that's where you have to kind of balance off with strengths. Like, I'm going to join this angel syndicate that specializes in investing into that industry, so that I can lean on their strengths when it comes to sourcing and due diligence, and I can lean on my strength in adding value with things like recruiting. Right. So that's where you have to think. If I'm going generalist, actually, what is my strategy that sits behind going generalist? If I go really narrow, it has the advantage that I can go deep within a vertical, develop a deep network within that vertical, and a deep understanding of that vertical and the trends and what's going on within it. So I can add value within that vertical and become known within that vertical. So there's a guy called Chris Abadesh, for example. He's a quite famous fintech investor. He's done over 100 fintech deals. He's a fintech angel. If I'm a fintech founder, he's one of 10 probably in the UK that we know generally invest in a ton of fintech deals. So brand wise, it helps you quite quickly differentiate yourself because you're putting a stake in the ground. Green Angel Syndicate, where we're both members of, right? It's quite clear. They invest in the fight against climate change. So if anyone's building a business in that field, you want to get on the radar of a Green Angel Syndicate. It's a lot easier to build brand in that way. You know, one of my biggest challenges when I worked at Backstage Accelerator was that it was industry agnostic. So I struggled to build a depth of relationships across such a vast range of industries to support the founders with introductions. Whereas if we focus on just fintech, for example, it would have been very easy for me to build relationships across the top 10 banks, 20 other fintech, emerging fintechs, and to have that deep knowledge and introductions, given that I'd worked in fintech as well, so I understood how it works on the inside. So I think the pros and cons are really personal, but it's important to understand them before choosing generalist or specific. And I always say that, you know, you write your vision in ink, but your thesis in pencil, because you're meant to iterate on it. You're meant to learn more about yourself, what you like, what you don't like, to improve your thesis over time. So you kind of got to lean into the fact that it's a continuous learning journey.
Absolutely. Yeah. I love that. And I definitely, I've been on going through that journey mentally, right? So my thesis is incredibly specific. It's investing in female founded climate tech businesses, very specific, because I want to move the needle on climate change. And I also want to switch the balance on how many females, like female founded businesses, are getting investment to the small, you know, with the tiny checks that I'm writing. So I'm not really moving the needle.
No, I love that.
Nudging it slightly, but even then, you know, you get that, like you said, FOMO, right, where a business will pitch you and you're like, oh, you don't quite fit in my thesis. But yeah, I think it was Tim who said sometimes it makes you want to cheat on your thesis.
Yeah.
So yeah, it's always trying to like walk that balance between what you said you'd set out to do and what you ultimately do, but also not being too wedded to it. And you mentioned a bit about crowdfunding. So you said one of the routes in was, have you invested in a business on an equity crowdfunding platform? So is that literally, because on some of those you can literally put a tenner into something? Does that counts?
It does, and that's why it's such a gray area where you talk about regulation. But you know, regulation is always a bit grey, and sometimes entrepreneurship is exploiting the grey. When you see these scooter riding companies, or Airbnb letting strangers stay in your house, or Uber letting a stranger get into your taxi, and just like all of that was in this grey area of policy and regulation. The same is true even for angel investing, right? And I'll say that the risk sometimes with the equity crowdfunding platforms is that the founders and the entrepreneurs can set the valuation at whatever they want. And a lot of the investors that are investing for the first time are amateurs, so they have no benchmarks to know whether that valuation is too high. And there was a famous case study last year of CityMapper, the famous navigation application. Yeah, that's it. Likewise. And they got acquired by a European company called Voy. But the price at which the acquisition took place meant that anyone that invested on the equity crowdfunding platform, which I believe was Seeders or Crowdcube, actually lost money. So we have a case study on our blog of one of our members who invested £500 on the equity crowdfunding platform back in this app that we all love. I love it too. But actually they got £300 back at the exit. And I had to explain to them that it was the price per share that you paid on the app, on the equity crowdfunding platform, because the valuation was so high, versus the exit price, which was lower than the price per share that you paid for it. And she asked me like, oh, so who made money in that deal? The earlier stage investors who invested in earlier rounds when the valuation was lower. So it's really important to understand that dynamic, because it affects, like, if there is the eventuality of an exit, like actually my price per share really matters.
Yeah, that's so interesting. And I suppose people who are really, really new to investing, A, wouldn't know to look out for that. B, wouldn't know what a good valuation or a sensible valuation for that business would be. Like, is there a module on that on Open Angel?
To be honest, we used to have one. We used to have one called transactional economics.
Okay.
But instead, what we did is we pre-recorded kind of like elements of that module, like your valuation, dilution, return expectations. Because what we found is that it was so technical that it needed more than the 2 hours that we had together, the hour and a half that we had together. So we pre-recorded it, anticipating that we could have more conversations around it rather than like limited to just the 1.5 hours.
Yeah, that makes sense. Fair enough. It is a very complex topic. I don't blame you. And are there any sort of basics that people should start thinking about if they want to move into the world of angel investment? Obviously, other than going and looking at all of the brilliant resources that you've compiled on Open Angel, what else should people be considering before they decide whether or not this is a path that they should take?
I think taking a step back and thinking about wealth creation in general, I always encourage people to think about that almost like your financial hierarchy of needs. Like at a very stable is like covering your lifestyle costs on a monthly basis with some margin, some money that you can set aside and save, budget and save. The next level up is once I've budgeted and saved, actually, have I ever thought about like tax and actually like how to be more efficient with paying tax? Like, should I be getting an insurance policy and putting it in trusts? Should I speak to a financial advisor? Should I have an accountant? So thinking on that level. The next level up is, all right, have I maximized my ISA and invested into like my stocks and shares through ISAs or ETFs, so like a number of stocks and shares in one month. Like, have I maximized that in my pension? Am I utilizing my pension to invest in a tax efficient way? And I think the level above that is then, do I want to have ownership stakes in these privately held businesses that can grow really fast, but actually like 8 out of 10 of them may fail? So to be able to do that, I need to be able to set aside an amount of money that I can afford to lose. So for some people, that might be 5,000 a year. For other people, it might be 50,000 a year. But if you set that up front, then it sets you up in a realistic way for the journey ahead, because you already treat it like a sunk cost. I always talk about you write the check, you write it off, and you go to work. I got that from a good friend of mine, Matt Pennycard, and I'm a firm believer in that. So if my budget was, for example, £10,000 for the year, instead of investing all of that money into one startup, I might chunk it up into 10 £1,000 bets, because the aim is to build a portfolio knowing that I'm going to have a loss ratio of, let's say, 6 to 8 startups. So only 2 are more likely to make me my return. So I need to get to that 10, right? I need to build a portfolio. And that's the mentality to have and the discipline to have, to say, even though this deal is really exciting, I believe that I'm going to see more exciting deals going forward. So let me just leave that 1,000 in this deal and do 1,000 in the next and do 1,000 in the next. And maybe that might take you 2 years to actually get to your 10. And in that point, you might say, oh, I want to get to my next 10. So I have a really diversified portfolio. After you get to your next 10, you might be like, I want to start following on rounds so I can double down on my winners that are actually performing really well. So that's how you start to be more strategic in how you build almost like a ladder and a stepped approach to investing into startups, rather than gung-ho, putting like all of your money or too much money than you could really afford to lose into your first deal, getting really burned and saying, I'm never doing that again, and generalizing based off that experience.
Amazing. We in one of our previous episodes, we interviewed Marla from Hamesa and David from Alma. And I think it was Marla that said their real goal is to get people to invest check 2, check 3, check 4, right? To do multiple deals in their first year, because there's a huge percentage, and I can't remember the figure right now, but a huge percentage of angels make their first investment and then don't invest again.
Cliff. Yeah, absolutely.
Yeah,
absolutely.
Interesting. Yeah, cool. Well, Andy, I've kept you so long. Thank you so much for spending so much time with me and for being so generous with your knowledge and telling us all that story. And yeah, massively appreciate it. One last question. What are you really excited about for the second half of this year?
I'm really intrigued on how I can really help leaders be more human at work. So with the Angel Investing School, I've been nurturing, developing people within this narrow data set of like angel investors and experience. But actually, the more I've been exposed to leaders, to startups, to founders, the more I realize that a lot of them don't have the leadership capabilities they sometimes need to go along these journeys. And there's so many unknowns that are really avoidable if they just had a coach and support. So actually what happens in these startups is, a lot of the times they get to 100 employees and they want to reward those early employees. So they start making them managers as a reward, but you don't train them with the capabilities. You have such a varied experience of management depending on what team you're in and what their interpretation is of management. So
Yeah.
it's one of the problems now I'm curious about fixing under this portfolio of, I guess, products that I run with the Angel Investor School, Open Angel, and executive coaching work that I do. So it kind of brings it all together into going deeper into developing talent.
Amazing. I love that. That happens a lot in the world of sales and in the world of recruitment specifically, where if you make money, they promote you to a manager, but the skill set that enabled you to be a great salesperson is not necessarily the same skill set that makes you a good people manager. So yeah,
Spot on. And maybe you want to be an individual contributor and you just want more pay for doing exactly what you're doing before.
yeah.
So yeah, I think those paths are important to exist actually.
Absolutely. Amazing. That's brilliant. Well, thank you so much. And anyone who's listening that wants to start their path into angel investment, go and visit Open Angel. Equally, if you're a founder and you're thinking about raising a round and you want to hear journeys and stories from other founders that have sort of been on that path, again, go and check out Open Angel to learn about that. And any businesses that are listening or individuals that are going on that management, learning, coaching journey and want some support, again, I'm sure Andy would be very happy for you to reach out.